Welcome to episode 121 of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we will take a look at a breakout trade setup. We will look at how to identify this trade setup, what are the best places to look for breakout trades, how to enter the trade based on this type of a trade setup, where to place a stop loss, and as always, how to exit the trade with a profit. So let's go on to the charts now.
Here we are looking at bearish continuation trade. This is Euro Aussie 1 hour chart. A bearish continuation trade is when price has been moving down. So there's a downtrend in place and we are looking to enter into a continuation trade and looking for price to continue in the direction of our previous trend. In this case, price has been moving down. It's in a downtrend. So we're looking for a continuation to the downside. So the first thing in this case is to identify the trend, which we can see price has come down. It's come into this support level here and price starts to consolidate. So once price starts to consolidate, we draw our lines. We draw our top resistance line and we draw our bottom support line here and see how price reacts within those lines. So if price starts to go up and goes above our resistance level, then we have to wait for price to show us that it's willing to continue lower, because otherwise it could go all the way. So once we see the price close below this consolidation, that's the time we want to enter our trade. So we have to wait for price to break below this consolidation level, this range, and for price to show us that it wants to go lower. So in this case, once we get this candle close, we wait for pullback. Generally, we can wait for about 50% pullback. So this is where, as the price is pulling back, we want to enter the trade short because we're looking for price to continue. So this is where our entry would be, and we are looking for price to continue lower. So our stop would go on the other side of the consolidation here. We enter our short trade here and we continue on with this trade as long as price is moving lower. And as we can see, we have a lot of red candles, so we continue holding our trade. Make sure you're trailing your stops behind this previous highs. And as we get into the bottom here, we can see that the price is continuing lower, but now we are coming into the weekend. So this is the weekend over here. So it's best to exit our trade before we run into the weekend, because sometimes price can go in the opposite direction. In this case, it gapped down, but sometimes it can gap up as well. So it's best to close the trade going into the weekend. So we would close our trade here, and from entry to exit here, we get 117 pips in our trade. So just to recap here, we're looking for a bearish continuation trade here. Price is in a downtrend and it starts to consolidate at the bottom here at the support level. So the first thing we need to do is draw our consolidation range here. And once price breaks below that consolidation, that's our trigger to enter the trade. So once this candle closes below, so I like to see a candle close below, because sometimes price can just come down and get all the people in and then go back in the opposite direction. So that's why we need to see a close below this level. Once price closes below this level, we wait for a pullback, and as the price pulls back about 50% of this candle, we can enter our trade short. Our stop would go on the other side of this range, just in case price wants to come back into the range. And we stay with our trade for as long as we keep seeing these red candles, and then as we come to the end of the day, we can close our trade out. And also, if you look at the volume here, as the price starts to move break below our consolidation, our red volume starts to increase. And as we go into the close of the day here, towards the end of the day, see how the red volume is going lower. So that's a good sign that shows us that price is not likely to continue too much further now, so it's best to close the trade out. So we close the trade out at the end of the day here. We get 117 pips in the trade from entry to our exit right here. So our profit is 117 pips, or $1,170 if trading one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course.
Thank you so much for joining me today. I hope you enjoyed this episode. If you like this trade setup, please feel free to share it with your friends. And don't forget to like, comment, and subscribe to the channel. I'll be back with another great trade setup tomorrow.